Yo, what's up, investors? It's Bafi here bringing you the next Tycoon Talk, and today we're doing an annual review of my stock portfolio, which returned $50,000 for the year of 2023. Now, this 2023 stock portfolio performance annual review is crazy because for the first time ever, I'm fully transparently disclosing my entire Robinhood portfolio, which is one of my 4 stock portfolios. And so we're going to look at the returns that I gained, how much I gained from each of my different funds that I have in the account, along with my individual stocks that I have in this account. So stay till the end because this is going to be crazy and mind-blowing, and it's going to give you so many perspectives. But keep in mind, this episode is not just about numbers and returns. It's also about philosophy, strategies that I have implemented throughout the year that has allowed me to generate $50,000 in the year of 2023. And so perhaps you might gain some insights and look at your own strategy and get some other additional perspectives on how you can potentially construct your portfolio to meet your specific financial goals and needs. If you're new or returning to the channel, give us a thumbs up, subscribe, turn the notification bell on, and give us some comments on some of the topics you would like to see going forward. That way you do not miss any future episodes. If my voice sounds funnier than the usual, that's because I woke up this morning with a cold, and I still decided to go ahead and make this episode because, in life you just got to roll with the punches. It is what it is, but I think it is important that I do get you guys this information to help you, especially as we enter into 2024, so you can make sure you get your fair share of this wealth building machine called the stock market. Without any further ado, let's dive into the Robinhood stock portfolio that returned $50,000 in 2023. Let's roll. Cheers. For the year 2023, my Robinhood stock portfolio returned a total of $50,000. And this is insane when I think back because my first job out of college, I was making $34,000. And in the last 10 years, 9 out of those 10 years, my salary never got above $45,000. And so to see my stock portfolio in just 1 year, 2023 alone, provide a return of $50,000, it is such a mind-blowing experience, and I want everybody to also be able to experience that, right? Your money at work is better than you at work, and your money can work harder for longer and generate more than you can generate, right? You go to work, you get paid, that means you're working for money. And so money has to go to work and it work for you. It's called reciprocity. To break it down even more, I don't think people really understand how insane that is, right? Because when I was working, making $34,000 a year or $45,000 a year from my 9 to 5s, I would wake up early, right? Get to work, shower, eat, put in sometimes 10 hours, sometimes 12 other days, or 14 hours to get some extra overtime. And so when you think about 365 days, the amount of physical labor it takes in terms of energy, output, transportation, cost, time invested in generating that $34,000 or $45,000 salary and then deducted by taxes, right? When you compare that to the stock portfolio that I'm talking about that returned $50K in 2023 alone, it is insane because I basically traded no time or no energy to make $50K. And I worked in the sports industry, so in terms of 9 to 5, there's really no flexibility. It's dependent on what games or sports that are in season, and at times I might work till midnight or past midnight, and I have to be up early in the morning and get to work by 8, say 9, right? And so to see the fact that your money can make you more money without you spending more time to generate that money, that's a mindset shift that changed my perspective on money and my relationship with money from a limited belief from, the system is rigged against you and different backgrounds don't have access and don't have opportunity to realize like, oh my God, there is abundance, there is opportunities, there are ways that we can utilize the system and invest our money to generate. And so this video is really gonna help you kind of get a deeper dive into just things beyond the numbers. Another big important shot to analyze and take into account, especially as a new investor, is in the beginning of 2023, right? All investors, analysts, professionals, Wall Street, the media, everybody was expecting a mid to a deep recession, or at least some sort of a medium landing or hard landing recession in 2023. And so it's interesting when you look at it because in retrospect, the stock market actually performed significantly better. The economy held up extremely well, despite the Fed raising interest rates 11 to 12 times throughout the year of 2023. Yet everything is still booming. And so this goes to show you that even the professionals have no idea what the hell they're doing, because you can't predict tomorrow, next year, next month, the next 6 months. It's virtually impossible to predict what's going to happen next. So keep that in mind when you're making your investment decisions and picking your stocks or funds. It's interesting because despite all the access, tools, and resources that these professionals and high-level people have and analysts have in determining where the stock market is going to go, they all literally still got it wrong, which is wild, right? And so not only did the stock market provide investors with positive returns, the S&P 500 provided 22% return to investors in the year of 2023. So this goes to show you that, honestly, nobody has a clue what they're doing. Nobody. So the market returned 22%. My stock portfolio returned 30+%, which makes me kind of feel like a genius, like I'm Warren Buffett. Nah, I'm just kidding. But it is nice to see your money going up, especially if you put in time to learn about the market, invested in financial literacy, and have a long-term investment mindset, and you invest consistently for the long term. That is the key to winning in the stock market. Right now is a great time to insert a disclaimer and let you know that my stock portfolios and my stock returns are designed for my financial needs and my financial goals. And therefore, do not assume that you can simply just go ahead and buy whatever I've bought and do whatever I've done to generate my returns and expect to get the same exact returns, because we're all starting this journey and we're all at a different point within that journey. And so it's important to take what I'm giving you or what I'm talking about and do your own additional research and assess your financial goals and needs and create a portfolio that is aligned with that. In addition to that, past performance does not dictate future performance. And so nobody really knows what's going to happen in 2024. And that's another reason why before you buy any stock, any fund, you do some homework and do some research. I'll be more than happy to help anybody that needs some assistance with that. And feel free to leave some information in a comment and I'll connect with you later. Cheers. In the future, I will make videos and courses detailing exactly how I conduct my research when it comes to picking my funds and my individual stocks. And so you will also have that reference point to help you and guide you on your research and investment journey. Now let's talk about the portfolio. At the beginning of 2023, I had no clue exactly how much I will make from this portfolio. And anybody that claims that they knew exactly what they were gonna get by the end of 2023, they are lying, or they haven't been investing long enough, or 3, they clearly have no clue what they're doing and how the stock market works. Let's talk about the Robinhood portfolio, how it's designed, my asset allocation, and the returns that I gain from each of them. And so we're gonna start off with the most important piece of my portfolio construction, which are my index funds and ETFs. Also in the future, I will be making videos on each specific index fund that I have, my strategies and philosophies behind them, along with my individual stocks as well. And so be on the lookout for that. If you haven't subscribed already, make sure you do so and turn on the notification bell. That way you don't miss a thing. Starting with my highest performing fund that provided me with the highest return in terms of my index funds and my ETFs is my iShares Semiconductor ETF, which provided me with 56% return on the year of 2023, kicking my financial journey into the next gear for your boy. Let's go. Now, this fund is a high octane, high tycoon, big bag type of talk. And because it is made up of semiconductor companies, and if you know anything about semiconductors, you will realize that the entire world, all the businesses, all the economies, all the nations, the entire globe literally spins on what semiconductors do and provide the rest of us. And this one is powerful because semiconductors quietly power all the devices that you and I use every single day. And this is crucial because semiconductors make the tiny but mighty chips that goes into every single gadget that allow us to thrive, live a convenient life, live an effective, and have everything perform at its optimal level without fail. And some of the examples include your smartphones, gadgets, tablets, automobiles, medical devices, gaming consoles, your refrigerator, your microwave, your computers, you name it. Anything that utilizes any level of technology, any level of automation, processing power, storage, software, you name it. It has semiconductor chips in there. Without these chips serving as the brain, nothing literally works. Literally, nothing on the planet will work without these chips. So in essence, semiconductor companies create the brains, aka these tiny chips, that allows these devices and everything we enjoy and use to process information, store data, and do all these multitude of functions that we enjoy the most. And so my strategy and philosophy behind it is, if this is essentially aka the new oil, right, that's going to power the next generation of advancement, innovation, AI, robotics, automation, you name it, we're going at it, whatever. Okay, if that's the reason, if that's the case, then it's important to own the source, not just the end product or the end device. Okay, and so for me, owning this source is important, and for that reason, the ticker symbol for this fund is SOXX, SOX, and this fund makes up 11% of my entire Robinhood stock portfolio. Next, we have Vanguard Growth ETF, ticker symbol VUG, which makes up 10% of my Robinhood portfolio. And for the year 2023, it provided me with a 43% return on my investment. Followed by Vanguard Information Technology, ticker symbol VGT. And this particular fund holds the biggest percentage in my Robinhood portfolio, holding 14% in that portfolio. For the year 2023, it provided me with a return of 48% of my investment. And in a way, my philosophy and strategy behind it is, the reason why it's so big is because in a way it's no brainer, because when you look at all the 11 sectors, information technology is the most profitable and provides the most returns for investors. Not only that, it also is the sector that literally powers all the other 11 sectors within the economy, right? And so it's better to own the core of the economy and the most profitable stocks that are all combined into one fund. And VGT is really your number one technology fund, in my opinion. Next is perhaps the most famous and notorious benchmark fund of all time, the Vanguard S&P 500 ETF, ticker symbol VOO, which holds 12% of my entire Robinhood portfolio. And for the year 2023, it provided me with a return of 23% on my investment. Just so you know, this benchmark right here is no joke, because that's essentially how we judge how the economy is actually performing, right? And so everybody on Wall Street, the professionals, they compare their portfolio returns to this specific benchmark, which is the S&P 500 index. And part of the reason why I'm not a huge advocate for trading stocks and short-term investing is because the data shows that 90% of fund managers and traders are not going to beat this Vanguard S&P 500 index fund over a 10-year period, right? And so 90% are not going to beat it, and about 3 to 5% are going to break even. That means that people that manage to beat it long-term consistently is about 3 to 5%, right? And so if you can't beat it, you better join it. I mean, that's that simple, right? And so for all my investors that are on their financial journey, if you look at your portfolio returns and you are not doing just as good as the S&P 500 or better, then you're definitely investing probably with the wrong philosophy, and you might have skipped out on financial education to gain the proper investment strategy, okay? So if you look at your portfolio and you are underperforming, you might need to reevaluate some things. Moving on to the next one, we got Vanguard Mega Cap Growth ETF, which holds 7% of my portfolio. Ticker symbol is MGK. And for the year 2023, it provided me with 48% return, just like the Vanguard Technology ETF. Next is iShares Russell 1000 Growth ETF, ticker symbol IWF, which is 8% of my Robinhood portfolio, and it returned a total of 39% on the year, just shy of 40%. And my strategy behind this fund is really to kind of lean into the mid cap and small cap stocks that have a lot of good potential that are combined into one huge fund, because guess what? Eventually they will also come and join the party along with the Magnificent Seven stocks, which is mainly the top stocks that everybody know of. The next fund is an iShares Core High Dividend Equity Fund, ticker symbol HDV, and it holds about 2 to 3% of my entire portfolio in Robinhood, and it provided me a return of negative 3.5%. Yes, you heard that right, negative 3.5%. This is not shocking or surprising to me, because the fund is strictly made up of high dividend paying stocks, and so I'm invested in that not because I'm expecting capital appreciation like the other funds. My focus on this specific fund is really to increase my dividend income, meaning I get paid more at a higher percentage in dividends generally every quarter. And so I can reinvest that money to then continue boosting my money printing machine, which is my stock portfolio. Another dividend focused fund that I have in here is Vanguard High Yield Dividend ETF, ticker symbol VYM. And this only makes up about 3 to 4% of my portfolio, but on the year it returned just a little bit above 2% from me. Again, the strategy and philosophy here is to really focus on my dividend income more so than capital appreciation, right? Because building a stock portfolio is like building a soccer team. You need your forwards, you need your midfielders, your two-way players, and you need your defenders. Every fund has a position within the portfolio, and every stock has a position within the portfolio. And if they work well together, like a Real Madrid, right? Or, like Man City, then yes, you have a really good chance in doing really well within the stock market. And this dividend fund is the only one that I can say really broke even, or at least provided me with a little something in terms of capital appreciation. All my other dividend funds really didn't perform well in the year. And it's not surprising because you don't buy dividend stocks, again, for capital appreciation. You buy it for multiple streams of income. You buy it for dividend income so you can have more money to contribute to your stock portfolio. That's literally the only reason why I have dividend funds in here. The last dividend fund I have in here is JP Morgan Equity Premium Income, and ticker symbol is JEPI, JEPI. And again, very similar strategy. This fund is maybe 2 to 3% of my actual portfolio. And on the year 2023, it actually remained flat, meaning it didn't really return anything to me. But again, just like I said before, the focus is on high octane dividend payments because I like getting paychecks. I don't just want to see the money grow. I want to also get paid. The last fund I have in this portfolio is ProShares Ultra Pro QQQ, ticker symbol TQQQ. Okay. That sounds like I don't know. I feel like I'm shooting an infomercial or something. Anyway, this is the latest fund that I added to the portfolio in December of 2023. And this is high octane, high risk, high reward. And so for me, this is really my quote unquote, my bullish, aggressive fund to play. And I'm comfortable with what it does and what it doesn't do because I don't have a huge exposure to it. It is only about 2% of my entire portfolio. And I bought it in December, like I said. And so I'm okay taking that additional risk because it doesn't really impact my overall long-term returns for my Robinhood portfolio. So understand that this is a leveraged fund. This is not your regular fund, it's leveraged. So everything is times 3. Think about it, right? So it's crazy. And because of that, it comes with a lot of risk and you have to be able to tolerate that type of risk, which I'm fairly comfortable with. Because I just bought it, it's only provided me with 2% so far in 2023 because I bought it in December, right? It's only had 1 month. But check this out. If I had made investments in this fund at the beginning of 2023, by the time we get to the end of 2023, this fund would have returned 174%, which is insane because it blows all the funds out of the water. And it's ridiculous, right? So imagine a $10 investment at the beginning of the year turning into almost $30 at the end of the year. That is how powerful and leveraged and risky this fund is. Again, high risk, high reward, but you have to make sure that you understand what you're doing and getting yourself into. And so that takes care of all the funds and ETFs that I have in my Robinhood stock portfolio, which all of that combined, all these funds make up basically 80% of my entire portfolio. The remaining 20% is the individual stocks that I have. And so we're going to talk about which individual stocks I have and how much they made me in the year of 2023. When it comes to individual stocks, I only invest in companies that know how to make a lot of money, know how to manage resources, have an incredible business model that the entire world and governments and everybody depends on. And more importantly, they know how to not only generate these revenue and returns, but they know how to maximize that money. They know how to keep that money, right? It's important. Making money is one thing, but knowing how to keep it and how to multiply it is another. For example, a person that gets paid a lot, invest a good amount, keep their expenses low, maximize it and create multiple streams of income. In this scenario would be a great company to invest in versus somebody who makes a lot of money, but spends a bit too frivolously, doesn't prioritize multiple stream of income, and therefore they're always living paycheck to paycheck, right? Bad investment, good investment. Another example would be a company that makes $50 billion in annual revenue, but manages to only keep $1 billion in net profit, which amounts to about 2% of their entire revenue base, which to me is not good and is not attractive. And so I'm simply not investing in that company because they can barely make ends meet. They are close to living paycheck to paycheck. Now, if a company makes $50 billion in revenue, has a net profit of $20 billion, that means they keep 20% of all that they made. And to me, that is more attractive as an investor. Why? Because they can not only do they retain and keep some of their earnings, they have more resources after all the expenses to then grow the business and scale the business. And ultimately that will come up in more dollars and more returns for us as investors, and therefore the stock price will go up over time. So what I tell people is the most important criteria when you're picking individual stocks is to invest based on life and not money. And you almost want to pick stocks the same way you will pick your life partner, because you don't want to focus so much on just the outsides and how they look and what it sounds like, what everybody's talking about. You want to focus on the core fundamental value of the business, real movements in the business strategy, and how effective they are at competing in this insane landscape. So if you don't know the important metrics in picking a long-term life partner, there's a good chance you will not know the right philosophies and strategies to do well in the stock market over the long term. And so 9 out of 10, you will make poor investments and poor choices. But losing money is really not the worst part. Losing time is the issue, because we don't have time to actually waste. My recommendation to you, especially if you are above the age of 30 plus, and if you're 20 or new beginner investing, I highly recommend that you don't focus on get rich quick crypto schemes, quick trading and NFTs. I would recommend focusing on long-term proven strategies that is backed by data to get consistent growth over the long term. Because 9 out of 10, if you don't know how to pick good partners, 9 out of 10 in the stock market, you're also not going to know how to pick good stocks or pick the right funds that's going to give you the financial freedom that you seek. Starting with the individual stocks that make up the remaining 20% of my Robinhood stock portfolio, the first one is my #1 returning stock, the king on the throne, the top level performer of the year 2023, which is the company called NVIDIA. This stock provided me with 225% returns in the year 2023. The stock price literally went from $183 to $483, which is insane when you think about it. And that is largely due to the company's incredible financials, incredible business model, and the fact that it is one of the biggest players, if not the biggest player, when it comes to chip making, AI, CPUs, GPUs, all the things that all this information has to be processed on. NVIDIA is essentially like the Amazon or the Apple of it. And so that stock has went bonkers this year, and I suspect that they're going to do well going forward because the fundamentals are incredible. Probably the most profitable company in the market right now. The remaining are in no particular order in terms of returns, but these are just the individual stocks that I have. So next we have Apple, which provided me with a 50% return in the year 2023. And then Alphabet, aka Google, provided 54% return on the year for me in 2023. And that is also followed by Amazon, which actually had an incredible year, giving me 78% returns on my investment. Meta Platforms, formerly known as Facebook, had an incredible year and provided me with 178% return on my investment. And that's partially due to the fact that Mark Zuckerberg, the CEO of Meta, has coined 2023 the year of efficiency. And I'm not gonna lie, them boys were not just efficient, they blew competition out of the water. And so kudos to Mark Zuckerberg. Bravo, Mark, bravo. Keep it up, keep making me money. And the reason why they've done so well this year is because they have literally become more effective, more efficient, more productive. They've thrown away some of the extra projects, extra metaverse stuff that they were doing, and they've tightened up their labor force. And as a result, the company has been extremely profitable. They're still relatively cheap compared to some of its competition, and is literally blowing competition out of the water. Next is one of my favorite stocks in my portfolio, which is a company that owns the entire world. And I call it the silent killer because a lot of people are not looking out for it, and they're so deadly, it's incredible. So this stock is Microsoft, and it has done incredible things for me this year, and be on the lookout for what it's going to do down the road in the future as well. It provided me with a 52% returns, and I'm not surprised because when you think about the enterprise market, the corporate market, and just nations and businesses in general, everybody literally uses Microsoft computers, products, services, gadgets, processes. Even the Microsoft 360 ecosystem alone, we all depend on it, right? Excel, PowerPoint, Outlook, Notes, OneNote, you name it. All these different things within the ecosystem is extremely powerful. And so all businesses utilize these services, and they cost money. They're not free, right? Microsoft Word included. So not only do businesses use it, hospitals use it, governments use it, the schools, high school, middle school, college level, everybody on the planet literally uses Microsoft Suite, Microsoft Office, Teams, you name it. And so the company service section is incredible. The cloud-based products and services are incredible. And it's is a company that you do not want to sleep on because it's just, oh, Microsoft. No, it is a serious competitor, especially in this AI race right now. They are probably the top AI company that you probably think they're not even AI, but they're cooking. All right, they're cooking. Next, we have one of the most controversial companies that is ran by one of the most controversial CEOs, and everybody has their own opinions about Elon Musk. But the guy is just he's just a brilliant genius. And of course, sometimes, yes, he doesn't operate in the traditional / typical CEO fashion. But Tesla has had an incredible year for me. It has returned and provided me with 110% on my investment into Tesla stocks for the year 2023. And it's also not too shocking because when you look at the automobile and transportation industry, there's a huge shift and initiative to get closer to electric vehicles and greener energy. And so Tesla is really the flagship for that entire movement. So many countries have a 2030 goal between 2030 and 2035 to kind of go fully electric. And so when you look at what Tesla has been able to accumulate and do over the last 5 to 10 years, they are literally winning that race. And I believe they're going to continue doing so for a long time. So shout out to Tesla and Elon Musk. You can feel how you feel about the guy, but he is working on some crazy, interesting solutions to some serious worldly problems. The next stock is in the pharmaceutical / healthcare industry and is one of the best kept secrets that people don't really pay attention to. But the company is Novo Nordisk, and they make a lot of pharmaceutical drugs and all these drugs for cancers, weight loss, insulin, you name all these type of drugs, right? So that's what they work on. And the company provided me with a 48% return this year. They have a lot of things in the pipeline, a lot of things in different phases and trials, but they're very successful, really profitable, and strong financials. And for that reason, I think they're a huge contender in the healthcare pharmaceutical space that many people don't really pay attention to, but they're serious competition. They're based out of Europe as well. That 48% return is incredible because for the most part, the healthcare industry have not returned much to investors this year. Some of them are flat. A few of them are even in the negative. For example, if we look at Pfizer, right? Pfizer was down 45% in the year 2023. Johnson & Johnson has was also down 13%, right? And so when you look at a lot of these healthcare pharmaceutical stocks in 2023, they have not really returned a lot to investors because part of the investing landscape and philosophy is also cyclical. And so sometimes investors move and shift, and different environments, provide different advantages and disadvantages. So right now, where the advantage really is in technology, is in the banks are also haven't provided a huge lot to people with the exception of maybe JP Morgan. But the tech AI world is really where investors are excited about the future and they're betting on more returns in that sector. 2 individual stocks remaining that I'm going to cover, but these 2 stocks are really my bullish, aggressive plays or my bets, my big bets, high risk, potential high rewards, depending on how things play out over the next 10 to 20 years for these 2 individual stocks. First of these 2 stocks is Palantir Technology, and the stock has had an incredible performance in the year 2023. The rally really began in the middle of the year and it just kept going and it hasn't slowed down. So for the year of 2023, this stock returned and provided me with 182%, which I think is very incredible. It's a younger company, went public not too long ago. They're starting to show some sign of great long-term capabilities, some profitability there, and some huge contract and more mass adoption with their system and platform. So it's incredible, and it's going to be cool to see what happens over the next 5 to 10 years. That's one that I'm very aggressive and bullish on, and I'm also comfortable if it doesn't turn out well, but if it does turn out well down the road, it's going to provide incredible amount of returns and speed up my financial journey and my wealth building process. Another young company that IPO'd, aka went public in recent times, is Kava, which I'm very bullish on. Kava went public June 2023, and so far it has returned your boy 20% on the year for 2023, which I'm excited about. I'm super pumped about Kava, man, because I love food, okay? And Kava is about food. And I'm particularly excited about Kava because it's a Mediterranean fast casual restaurant which have locations all over the US. One of the things that sets Kava apart is the way their business model is structured is designed to basically benefit from a lot of the diversity and the various ethnic groups, along with those that are health conscious about what they eat and put in their diet, right? So their menus basically consist of a lot of healthy nutritional options and values there, mixed with great taste and great flavors. And so it is not your typical fast food. It's like a very healthy option for people that want to enjoy great food with great taste. If I had to describe to you the industry or the competition environment that they operate in, you can think of them a little bit more like, I don't want to say Chipotle because they're not quite like Chipotle, but they kind of compete, quote unquote, to the same customers, okay? And so we all know Chipotle plays a huge role within that industry, but if Kava can even manage to gain 5 to 10% share of that entire industry and the customer base, is going to be incredible because the company is already profitable and they just went public, right? And so they already showing signs of profitability and managing and scaling cautiously. And so I don't see any red flags about Kava thus far. And typically I don't go for younger, new companies, but Kava is very unique and special in a way. And I think they're going to do well down the road. Again, this stock is a long-term bullish play for me. And so I'm keeping a closer eye on it because it's a younger company and it's definitely a higher risk, high reward, but I think it's certainly worth it. Both of these stocks don't even make up combined. They don't even make up 1 or 2% of my entire portfolio, right? So they have very little exposure to them. So I have huge upside. The downside doesn't really affect anything. So there you have it, my entire Robinhood stock portfolio, including my index funds and my individual stocks and how they have performed for the year of 2023. I hope your portfolio also provided you with some great returns and you can be happy about your financial journey. And if it hasn't provided with some great returns, you might be able to learn a thing or two from this video and then re-strategize so you can also benefit from your hard work. It's important to keep in mind that not every year is going to give you high stock market returns. And so we have no idea what 2024 is going to look like. But I do have a theory and I'm pretty confident in my theory, and we can fact check this and return back in end of 2024 and see if this theory really worked out. And this is my theory. If the Fed manages to avoid a recession and create a soft landing and therefore we get back to bull market in 2024, I expect the S&P 500 at the end of 2024 to return investors between 12 to 16%. Not only that, in 5 years, I also expect the S&P 500 to double. Sirens. And if the S&P 500 doubles in 5 years, that means these individual stocks are going to have insane amount of returns. They're not just going to double. Some of these are going to be like quadruple, and a few of these can be 10 baggers, meaning 10x returns. So there are a lot to be excited about when it comes to stock market investing and for your financial future. However, if the Fed doesn't manage to create a soft landing and we end up having a mild to a deep recession, the beautiful thing is, obviously these funds and stocks will not return as much as I have projected or predicted, but it will give you a great opportunity to buy some of the best companies on the planet at a fraction of the cost. And I think you should, if we do hit a mild recession or a deep recession in 2024, I highly recommend you stay consistent, keep investing, and buy up as much of these funds and stocks, assuming you've done your homework and you've done the research and you are comfortable with the risk tolerance. Ultimately, nobody knows what 2024 is going to look like, but I'm excited and I'm embracing all the possibilities of what could potentially happen. So stock market goes up in 2024, great news. If it goes down, even better news because I get to buy the best companies and the best funds on the planet at a fraction of the cost on a discount. Now that's what I call Black Friday. And that summarizes how I made $50,000 in the stock market for the year 2023. If you enjoyed the video and learned a thing or two from it, give us a thumbs up. Make sure your notification bell is on after you subscribe if you have not. Leave some comments if you feel like sharing how your portfolio performed. If you have any questions, any future videos you would like us to work on, I'll be more than happy to do them. So leave some comments and happy investing. Happy New Year. Let's see what 2024 brings the rest of us. And I hope it brings us nothing but joy, fun, fulfilling life. Cheers.